Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research, and welcome to our top stock picks of the week. This week I'm joined by my colleague and fellow strategist, Dave Bartosiak. We've got two exciting picks for you, so let's jump right in. My top pick operates as a specialty finance platform for community banks to extend credit access in the United States. The company offers installment loans through its platform and serves consumers who are mainly turned away by mainstream options. It was founded in 2012 and is headquartered in Chicago. The company I'm referring to is OppFi, ticker symbol OPFI. About 60 million Americans are underserved by the banking industry, and this is where OppFi comes in. Their mission is to facilitate and make available affordable credit to those who may lack access to traditional options. So this is a stock that is not only highly ranked by our Zacks system, but is also outperforming the market. As we'll see, it's firing on all cylinders and recently reported record revenues during its latest earnings report. That's a bit about OppFi's background and services. Let's shift gears a bit and take a look at this stock's industry group. Digging a bit deeper, OppFi is part of the Zacks Financial Transaction Services industry group, which is currently ranked in the top 33% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And take a look at this group's performance. Stocks in this group have been outperforming the market over the past 1 month over year to date and 1 year periods. In particular, look at this year to date trend and notice how this green line has steadily outperformed the broader market this year. Stocks in this group are showing relative strength, and these are the companies that we want to focus on. Also note that stocks in this group are undervalued based on traditional valuation metrics, and they're also projected to experience above average earnings growth, which signifies a powerful combination that should lead to higher prices in the future. Moving to our snapshot page here, we can see that OppFi is a Zacks ranked number 1 strong buy. The specialty finance company has established a healthy track record of beating earnings estimates, as we can see here. They haven't missed that mark since early 2023. Earlier in May of this year, the company reported first quarter earnings of 38 cents per share, which marked a 46.15% surprise over the 26-cent consensus estimate. OppFi has delivered a 59.54% average earnings surprise over the last 4 quarters. So they've been consistently beating earnings estimates, and the stock price has reflected this. OppFi is up over 60% this year and has advanced an incredible 340% over the past year. And we could see that that trend looks set to continue as analysts covering OppFi are mainly in agreement and have been raising earnings estimates across the board. Estimates for the full year have been increased 14.95% in the past 60 days. The 2025 Zacks consensus EPS estimate now stands at $1.23 per share, reflecting potential growth of about 29.5% relative to last year. Revenues for the full year are projected to climb 10% to $578 million. These are exactly the types of trends we want to see and that we want to look for when narrowing down our list of potential stocks. So OppFi, ticker symbol OPFI, is my top pick of the week. Shares have really come on strong and rallied over the past month. I see more upside ahead for this stock. Next up, Dave will share with you his other top pick of the week.
All right, Brian, thanks for that top stock pick of the week. I've got another one here. This one also in blockchain innovators. It is Zacks rank number 1 strong buy, Marex Group. Could be Marex Group. I feel like it's more exotic to say Marex. Zacks rank number 1 strong buy. We've got a C for value, a C for growth, a momentum style score on B to help it round out with a BGM composite score of C. Really, the highlight here is this price consensus and EPS surprise chart. Now, when the stock hasn't been around that long, you can always zoom in on this by pressing these little plus signs. And then if you move over to that with that right arrow, you can get, the most up-to-date info. And here you see stock hasn't been around that long, but you have 3 beats in a row. Look at how the earnings expectations have changed. So 2023, they start off lower, they tick out higher. 2024, again, start lower, tick on higher. 2025, start lower, tick on higher. 2026, start lower, tick on higher. So everything is, low expectations that ended up rising over time, which is exactly what you want to see in a stock that you're looking at here. Now, our Zacks rankiness here, you can see the magnitude of the Zacks consensus estimate and what the trend has been. So the trend for the current quarter, for the next quarter, for the current year, and for next year has been earnings estimate revisions ticking up to the upside. And now the full year number for this year up from 313 to 328. Next year's numbers up from 351 to 364. So all of that moving in the right direction for the Marex Group. And then this detailed estimates page I want to show you guys, because this is really my favorite. It tells you everything that you need to know from even like earnings ESP. So analysts this quarter have actually been upping the ante, expecting that the stock's going to do a little bit better. We saw some of those estimate revisions ticking the upside. Look at the PE, under 14. Now you can compare that to an industry average of 15.6, where the S&P 500 is nearly 23 times. Of course, anytime you're in a financial, those PEs are typically a little bit lower. Revenue growth, 10% this year, 9% next year, so still nice and strong. And like we talked about before with that Zacks consensus estimate, that is a 6.84% gain for the current year, and next year going up another 10.98%. So it's all about the growth in this name. And here you could also see some of these earnings surprises. So a consistent beat over the course of the last year. These beats were a little bit larger before, and last quarter was only a 1-cent beat, but a beat nonetheless. So they've been under-promising and over-delivering quarter after quarter. That's exactly what I want to see, and that's why I'm naming Marex Group my top stock pick of the week. So there you have it, folks. Be sure to check out Zacks.com/promo for the hottest deal that we've got going on this week. For Brian Hayes and everybody else here at Zacks, I'm Dave Bartosiak, and we will see you next week.